You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guests and first-timers on Ron Siegel Radio. Aaron Serrano, Brian Mayhall, New York Life. Welcome, gentlemen.
Good morning.
Glad to have you with us. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. And of course, we're celebrating today. We celebrate every day on Ron Siegel Radio. I don't know if you have one, but today's National Camera Day. I think we all have a camera anymore, don't we? I mean, think about it. You carry a video camera with you even wherever you go. I was never young, but a long time ago when my kids were young, I remember carrying a big old camera, and it was, about 12 inches long, 4 or 5 inches wide, trying to take some videos, and you had to carry the cassettes with you, the whole 9 yards. Now we've got a camera that's better than that, sits in our phone. We're always ready to take a picture. And some of us are better than others, but some of us take selfies. Some of us shouldn't take those selfies. I'm one of them, but that's a different story. Got a face for radio, so it works. Let's see what else we've got going. We know that we're still in National Candy Month, National Almond Butter Crunch Day. Can we just say almond roca, please? I mean, wouldn't that be a lot easier? Of course, I don't know. Is almond roca, I think, became a seasonal candy, but I thought, seasonal for me and candy, that means a day that ends in Y. I just throw that out there. And National Waffle Day. Waffle iron day. Come on, get rid of the waffle iron. We just want the waffle itself. How about OEB breakfast down in Costa Mesa? Have you been there yet? I've shared it on our social channels. OEB, they make some amazing waffles, amazing breakfasts. Can we just cancel the show today and go down there and get breakfast? Well, maybe after the show. We'll look at it. Hey, let's take a look and see what the markets are doing today. The Dow Jones Industrial Average now up 77 points. S&P 500 down 288. NASDAQ down 12. Oil is up 23 cents a barrel. Well, we knew that was going to continue. When you have this fight on oil, what else are you expecting? National cost of a gallon of gasoline. Well, it went down again. It's $4.88 a gallon on the national level. A week ago it was $4.96. A year ago it was $3.10. I know it's all because of Russia, right? I mean, because they give us 8% of their oil. I mean, come on, get real, folks. Right here in the formerly Golden State, $6.31 a gallon of gasoline. Josh, you're at $5.58. Don't complain. You're better than we are. Jody's at $5.28. And as always, Lori's leading the way. $4.43 a gallon of gasoline. But we get sunshine, and we don't have to deal generally with triple-digit weather, so we get to pay for it. Politicians, unbelievable. Moving right along. Speaking of politicians, can you believe this one? Howard Stern wants to get into the presidential running Maybe they forgot to tell him something that as a president you have to deal with. It might be called the Constitution. What are the first two things he wants to do? Add 5 members to the Supreme Court and get rid of the Electoral College. Think about that. Now, the Supreme Court, the count on the Supreme Court is not a constitutional number, so that could be changed. Electoral College, you know what it's going to take to get an Electoral College change? The Constitution changed to get rid of the Electoral College. And do you think that anybody outside of California, New York, New Jersey would go for it? Not a chance in the world, Mr. Stern. But I'll tell you this. What's the guy? Josh, maybe you know this one. Dana White. Do you think Dana White would have fun publicizing a Howard Stern Donald Trump debate? Talk about that one. That would be a must-watch TV. I mean, Dana White could make another fortune on that one. I just throw that out there for you.
It is what it is.
That would be kind of interesting to watch. California's come out and said, or at least the governor has come out, wants to give away more money. When does he want to give away this money? Yeah, you got it, right before the election. Unbelievable on that one as well. But he wants to give $1,000 to all of his rich donors. Oh, I'm sorry. Wait a second. No, he's going to give it to the people that know how to get around the system. Wait, I shouldn't say that one either. What is it? If you're making under $175,000 or something along those lines as a married couple, you'll get a little bit of that money. So here's the numbers. If you're married, making up to $150,000, you get $700. $150,000, you get a check. I get a check. Everybody gets a check. Making between $150,000 and $250,000, $500 payment. Making between $250,000 and $500,000, yeah, they needed another $200. And those making over $500,000, they already left the state, so they don't have to worry about it. They're not going to get a check. They're filing in Florida. Just throw that out there. And now if you have a dependent and you're a joint filer, $150,000, you get $350,000. $150,000, you get $350,000. If you're making between $150,000 and $250,000, if you have dependents, you get $250,000. $250,000 to $500,000, you get $200,000. So you could get as much as $1,050 right before the election. I wonder if that'll get in the mail. I wonder if they'll put that in the same mail as they put the ballots in. Shouldn't say that one either. I'll get in trouble there. I'm gonna get a lot of hate mail on this one today. I can see this one coming a mile away. But there's a lot going on watching these things. Is it helping the gas prices? No. Listened to a gentleman this morning talking about the idea of refineries. Yeah, we got a shortage of refinery. I shouldn't say that. He said, his opinion was we would never, ever build another refinery in the United States. It takes way too long. And the refineries that we have, they have capacity. So they could actually start putting more oil into the refineries if there wasn't so much regulation in getting the oil. Would that bring down the price of oil? Maybe. Think that we've got supply and demand. Now, we're going to talk a lot about finance today. Finance is driven by supply and demand. It's just plain and simple. Now, because I just got a message that we're running out of time here. Josh, we missed a item today. We got a birthday today. Today is the first, today, was it the 29th of June, if you're listening to us live. That was when the first iPhone was released. And I think my wife is still using the first iPhone. I do know some people that are using the flip phones, but that's a different story. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, what's going on around town? On the Town by Visit Anaheim. We've got that for you. Homeownership could be in reach with down payment assistance programs. Life insurance. Is it just for people that are dying? We'll talk about that and more. You can reach me anytime. Our off-air number, 800-306-1990. 800-306-1990 or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, how about debt consolidation? I know that the gas prices and inflation are eating your budget away. Debt consolidation, we're seeing a lot of families saving $400, $500, $600 per month just by restructuring their current debt. We'll help you with it. Let's see the S&P 500 now down 9.91. 10-year Treasury is down 11 basis points to 3.09. Mortgage-backed securities are up 17 basis points. What does that translate to you? How does that affect you? Well, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions. The 30-year conforming rate loan was locked yesterday, 5.927. The jumbo at 5.329. FHA at 5.71. The best loan on the market for those that earned it. The VA 30-year fixed rate loan, 5.47. And those of you in the rural areas, 5.667 on the USDA loan. But why is all of this happening? Well, we've been telling you, I know that the Federal Reserve does not agree with us, but they're wrong. We'll be right. We're heading into a recession. GDP came out this morning. Final reading for the first quarter, 1.6% down. We've been telling you that it's going down, and that's not a good thing. But you know better than listening to the Federal Reserve.
You know better than that.
Have they ever predicted a recession? Not in my lifetime. I don't think it was even in history either. But we're going to see what happens with the second quarter of GDP. It should technically, well, theoretically, it actually is that 2 negative quarters of GDP equals a recession. It actually comes out there's a national board that actually calls the recession, not the 2 quarters. But we're going to find out on July 28th whether we've got another quarter of negative GDP. We'll see what happens there. Speaking of recession fears, a number of major manufacturing indices, including the New York, Philly, Dallas, and Richmond, have all reported negative numbers far worse than expectations. Those are the different Federal Reserves, so think about that one. Apartment List published its national rent report this week, showing that rents increased 1.3% in June and 14.1% year over year. Remember, rents were still up 1.3% in the month alone, which is still around 15.6% pace for the year annualized. This report is for new rents. Renewals are going up high single digits on a year-over-year basis. That's the Mortgage Minute, brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Let's learn today. I always love learning new things. I always love sharing new information. We're going to speak this morning. Aaron Serrano, Brian Mayhall, they're here from New York Life. Now, I have New York Life. Is it New York Life Insurance or just New York Life?
New York Life Insurance.
New York Life Insurance. Okay. So, big question that everybody wants to know. In order to get our money, do I have to die?
Absolutely not.
Okay. So, I guess we're already on a good track right here. So, can you use life insurance and I'll give you the caveats. We're not going to give any legal, financial, or tax advice today. If you want some input on insurance guidance, the gentlemen do that for a living. You can call them or give me a call at 800-306-1990. I'll put you in touch. Trying to educate you a little bit, open a whole new world to many people, because a lot of people think that you got to die to get life, you're betting on the fact that somebody's going to die. And I don't know if the stat is still true, but it used to be that like 95% of all life insurance was never even cashed in. Is that somewhere close to that, or am I?
It's very true. That applies to term policies, which
Okay.
we'll get into the different kind of policies here soon. But you're right. A lot of people end up canceling their policies, and the life insurance companies keep the money.
And think about this: who owns the biggest buildings in every city? I'm just throwing that out there. It's the insurance company. So why don't we start off there, guys? Why don't we get into the very basics? Term versus permanent or whole life or universal. Explain that part of it for us first, so we can have a foundation. Aaron, why don't you give that one?
Yeah, definitely. Well, let me say, I've always been told that I've got a voice for radio, so I'm excited to kind of be here today and talk and listen to myself afterwards. So.
And ironically enough, I've always been told that I have a face for radio, so we're in good shape here.
So, term versus permanent life insurance, and to your listeners that are listening about mortgages and buying homes and stuff like that, term insurance is more like renting an apartment, right? The structure you're living in, you have your furniture in there, and the policy is yours. You rent it out for 10, 20, 30 years. And yeah, if you pass away during that time, then, the policy does pay out. Permanent insurance is like purchasing a home. You buy the house, you make renovations on the house, you even earn equity on the house. So just like you would earn equity on a permanent insurance policy, where you have a kind of like a savings account on steroids, if you will, with the cash.
Well, you get more money on the whole life?
Yes, correct.
Wow. Okay, that's a whole new concept. So I put in $100 and I might get more than 100.
Yes, that's correct.
Wow. Okay. And so maybe I missed it while I was doing some adjustments here, but the term has got like it says, it's got a specific duration. What about the permanent? Does that have a specific duration?
Yeah, your entire life. So as long as the premiums are paid, then the duration is your entire life. Some of them, you have custom whole life where you can do it for a certain period of time and you still own the policy throughout. So 10, 15, 20 years, or you have whole life where you pay it your entire life and you're earning that dividend and cash value on top of it.
Now on the whole life, can I pay it for a certain amount of time and let some of that premium pay it for a longer period of time, or does that not work that way?
Yeah, you have that option. If at one point you wanted to change the policy to have the dividends that you earn and the cash value that you earn pay the policy back, maybe you've fallen on, some hard times, some hardship or something like that. But yeah, you do have that option.
Okay. And are they both about the same amount of money, or how does that part work? Or the cost of them?
No, the cost is very different. Term is seen as, you get a lot of insurance for a very small premium payment per month.
Okay.
But it does end up costing you more in the long run, right? Because you get older, you're less healthy as you're older, and you have to probably get another policy, or you let the policy continue to go after the term is ended. And then the premium payment gets a lot larger. The whole life, you'll have that premium payment throughout the life of you paying it. So if it's a custom whole life for a certain period of time, 10 years, 15 years, you'll have that same payment for that amount of time. If it's a whole life, you'll have that payment as well for the duration of your life until you pass away and you cease paying it.
And there's some tax benefits also when you want to take some money out of there, aren't there? And we're not giving tax advice. We're just talking about from a high level.
Yes, there are some tax benefits, and I think we'll kind of leave it at that, right? To not give any tax advice or anything, but yes, there are tax benefits in owning whole life.
And you know what the fun of this is? I'm not licensed, so I can talk about some of these. Right? So the bottom line is if it's just like on a mortgage. So if you've got a insurance policy and it's built up a substantial amount or a amount of money, and you borrow against it, there's some tax benefits there. Just like if your home has appreciated and you borrow against it, there's tax benefits there as well. Maybe not even tax liability, but there's tax benefits. So you want to make sure that you're having a conversation. And I'm going to go back to one of my common concepts and comments. You can get this insurance and things like that anywhere. if you want good advice, might cost you a little bit of money, right? So it's just like going to Walmart. You can get a shirt at Walmart. It may not last very long, but it's a shirt. Might want to go to Nordstrom. It might last a little bit longer, but you're going to pay a little bit more money. So the idea, and you might actually get the right size, right? Someone like me, obviously, I need a big one, right? So if I go to Walmart and I get a small just because I picked up what I wanted, well, it might fit on my right arm. It may not fit on my right arm, but it might, right? So I got to get the right size. So similar in insurance, you got to make sure you sit down with somebody and have a consultation and figure out what are you trying to accomplish,
Yes.
right?
Yep, absolutely.
Do you want to start old or start young?
With insurance,
With
you want to
insurance.
start young. Absolutely, because it's a lot less expensive. You have less health issues when you're young, typically, and so you're going to get a ding for the older you are, more health issues. If you're even insurable at that point.
If you're oversized like me, Brian's being nice. I mean, if you're oversized like me, you get dinged on there. So I got 2 dings. I'm old and I'm oversized. Not gonna even say a word on that one.
We'll refrain.
they know who's got the mute button over here. Okay, so if I'm newlywed, just from a high level, I mean, when I was young, right before my first son was born, I went and got a whole life policy. Figured I'd just have it forever, and that would be the right thing for me. Is that a common, or do more people go with term, or is it more of a budget issue? What fits your budget at the time?
Ron, that's a really good question. One of the things that we specialize in here with our practice is we actually layer your policies to get you more bang for your buck. So we'll combine a little bit of whole life with term to maximize your coverage. That way you have that permanent level of coverage through whole life, and that whole life policy actually grows over time.
Something like me.
Yeah, it grows with you.
So it grows. Okay, so that's going to get bigger over time.
So the coverage increases as well as that cash value that grows within that policy. Those both grow, and in 20, 30 years, the coverage has leveled up, and so has the cash value.
Interesting. Okay, so when we come back, I want to talk a little bit about using insurance as a diversification tool. Can we use insurance as a diversification tool? We'll talk about that when we come back. We're also going to have Visit Anaheim's report. Where are we going to go this weekend? What are we going to do? It's a long weekend, so Visit Anaheim is going to bring us on the town. We'll talk about that. Homeownership could be in reach with down payment assistance. All that and more. You can reach me anytime. Our off-air number 800-306 1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by RSRHomescout.com, RSRHomescout.com. Want to know what your property's worth? RSRHomescout.com, fourth tab over, tells you 4 different valuation models of what your property's worth. Want to know what you can shopping for a new house anywhere in the country? About 97% of the country is covered. Want to know what the property's values are? Go shopping there. RSRHomescout.com. Put in the parameters, your price range, how many bedrooms, how many bathrooms. Obviously, you know who the favorite lender is. Home ownership could be in reach with down payment assistance programs, or how about other payment assistance programs? We've been showing folks, just did 3 different examples, not offers, but examples yesterday, where people could save $140,000 using payment assistance programs. Each one of them was $140,000 savings, right around, give or take, a little bit more, a little bit less. Recent survey from Bankrate asked prospective buyers to identify the biggest obstacles in their home buying journey. It found that 36% of those polled said saving for a down payment is one of their primary hurdles to buying a home. If you feel the same way, the good news is there are many down payment assistance programs available that can help you achieve your home ownership goals. The key is understanding where to look and learning what options are available. Here's some information that can help you. You can qualify even if you've purchased a home before. There are several misconceptions about down payment assistance programs. For starters, many people believe there's only assistance available for first-time home buyers. While first-time buyers have many options to explore, repeat buyers have some too. According to the latest Homeownership Program Index from downpaymentresource.com, quote, it's a common misconception that home buyer assistance is only available to first-time home buyers. However, 38% of home buyer assistance programs in Q1 2022 did not have a first-time home buyer requirement, unquote. That means repeat buyers can qualify for over 1/3 of the assistance programs available. Just as an aside, there are 352 down payment assistance programs in the state of California alone. And if you're a repeat buyer, you may still be able to take advantage of some first-time homebuyer programs depending upon your personal situation. That's because downpaymentresource.com also notes many of the first-time homebuyer programs use the U.S. Department of Housing and Urban Development's definition of a first-time homebuyer. Under their definition, you can qualify as a first-time buyer if you're someone who hasn't owned a primary residence in 3 years, a single parent who's only ever owned a home with a former spouse. Well, heck, Southern California, that means 70% of first-time home buyers or first-time marriages end in divorce. So a lot of people are qualified right there. That means no matter where you are in your home ownership journey, there could be an option available for you. You may be eligible for programs based on your location or profession. In addition to broader options available for repeat and first-time home buyers, there are other types of down payment assistance programs that you could qualify for based on your location. According to the National Association of Realtors, quote, many local governments and nonprofit organizations offer down payment assistance grants and loans targeted area borrowers and often with specific borrower requirements, unquote. Plus, there are programs and specific benefits for individuals working in certain professions or with unique statuses, including teachers, doctors, nurses, and veterans. Ultimately, that means there are many federal, state, and local programs available for you to explore. The best way to do that is to connect with us and let us advise you on this. Bottom line, down payment assistance have helped many home buyers achieve their dreams. And if you could qualify, they could help you too. And as always, I ask, if you have any friends, family, or coworkers looking to buy, sell, or borrow, can I count on you for the introduction? That is the Real-Time Real Estate segment brought to you by rsrhomescout.com. Continue our conversation this morning. Aaron Serrano, Brian Mayhall, New York Life, they're with us this morning. Learning about life insurance is not just for you to wait and die and get it. It's a financial tool, and we're explaining that and sharing educational information only. This is not an offer. You guys aren't life insurance underwriters, are you?
No.
Good. Good. I just wanted to double check. So you got to understand that their job is to educate. I'm going to guess even when you meet with clients, your number one job is probably to educate people.
That's pretty much what we do for the meeting. It's not really a sales pitch. It's more of an education on what their options are. And 9 times out of 10, the client's making their own decision.
Makes it a lot easier that way because you don't know until you meet with them. I mean, you're trying to insure kids, you're trying to insure a spouse, you're trying to insure a mortgage, college planning, a wedding, all these different things. Life happens.
Mm-hmm.
Makes sense. Am I getting close?
I think you're right on track. Everybody has, there's no one size fits all, right? And everybody has a different path in life, and everybody's in a different spot. So I may have a meeting with a client in the morning, and it may be completely different from the meeting with the client in the afternoon. There's different avenues to have conversations with and to educate.
That would make a whole lot of sense because I'm old and my needs are going to be completely different than my son who's getting married in 3 weeks. Right? And he's not old. Right? So the bottom line is that we're going to have completely different needs from the two of us.
Exactly.
Give me an idea on the usages of insurance for the living. So tax advice, we're not giving tax advice, but usage for tax and diversification. Give us some ideas of what that all means.
Well, one of the popular things that we're seeing a lot of people gravitate towards lately is retirement planning through life insurance. And one of the reasons for that is because what's going on in the markets, right? The markets have been volatile.
You think?
Exactly. So people are looking for, security in their retirement, and they're looking at their 401ks going up and down all over the place. And so with life insurance as a planning tool, as you mentioned, it's a financial tool. You can have a guaranteed income in retirement through life insurance if you plan it right.
So 2 questions that come to mind there. Is this an alternative to my 401k or is it held within my 401k?
I would say it'd be an alternative or probably more of a complement is what I would look at it as. So we're not discouraging anybody from contributing to their company plans. In fact, I do myself, but I also have a life insurance policy where I'm contributing to as well to diversify and provide a little bit more stability to my portfolio, because it'll take some of the pressure and allow me to maybe be a little bit more risky in the 401k plan at work.
So you can, so if I've got the life insurance as the investment, then that might be my stable side. And then I can look for more growth in the 401k. So I can go and not getting too far into the weeds. We're not looking at that, but you've got the option of going in a 401k. You can go to bonds or securities, generally mutual funds of those different things. I might be able to say, okay, I need to look at a little bit more aggressive, right? One way or the other.
Yeah,
and it balances out.
It balances out. So a common strategy we see is if what you're contributing to your company 401k equals $500 a month, let's just say.
Okay.
Let's carve off a piece of that, reposition it over to a life insurance plan to position yourself better for retirement. And then you still contribute to the 401k, but you're also providing that consistent and stable return that you would through the life insurance.
Now, am I subject to mandatory distributions on the life insurance like I am on my 401k once I get even older than I am today?
No, that's the beauty about the life insurance plan. It's you can leave the money in there until you're ready to pull it out. So it's not required to meet the IRS regulations around retirement plans, where you don't have access to it until you're 59 and a half, or you're not subject to the required minimum distributions at 72. So those don't apply.
They don't apply. Okay, that's a good idea. Get the government out of the way.
Yeah.
That's just my perspective. I'm not trying to put words in your guys' mouth here. So, those are some good thoughts. Now, when I die, the money that's accumulated in that policy, and so let's just throw a number out there. I'm just throwing wild numbers out there. We're not doing exacts here. So say my cash value has grown to $50,000 and I've got a $700,000 policy. Do I get $750 then, or is it just the death benefit? Do I get the money the cash value that's grown, or do I get the death benefit as well? Or are there various options?
Well, there are various options, but most generally what happens is, and if you remember what I mentioned earlier, your whole life policy coverage will increase over time. So it increases by nature of that cash value increasing.
Okay.
So they work in parallel with each other, if you will. So it'll be distributed at the same time.
Okay, so if I took it out on day one, and my cash value is zero on day one, and I've got a $700,000 policy, and I die the day two, if the policy pays off, right? I've got to make sure we follow all the rules of the contract. There's stipulations in there that we're not going to get into, but the bottom line here is then we get that my estate gets that 700,000.
Correct. And tax free.
Tax free.
Yeah.
I'm not going to tell my wife this because I don't want, I got a shovel. I don't want her to use it on this. So now 25 years later, and my cash value has grown to that 50,000 on that $700,000 policy. Then the number, this 700 is going to be something greater than
correct
700. We don't know what it's going to grow to. No guarantees here. We're still dealing in finance. We don't guarantee anything on Ron Siegel Radio. You guys do have a guarantee from what I understand. Most people are going to die at some point in time. And at some point in time, the government's going to take some portion of their money.
Statistics show that everybody does die.
George Burns tried to find a different way out. It didn't work. What are we looking to protect is what we're going to chat about when we come back. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. On the Town with Visit Anaheim is coming up as well. What are we going to do? We've got that romantic event, the big event, and the family event, all that and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990 on the Town segment, brought to you by Visit Anaheim every week at this time. Visit Anaheim shares a major event of the week, a romantic event of the week, and a family event for the week. This week, the Jake Brown Band is our major event of the week. Get your weekend started early at the Anaheim Packing House on Friday with live music from the Jake Brown Band. Music begins at 9 p.m. Explore all the culinary artistry the Packing House has to offer between food, desserts, beverages, while enjoying live entertainment. The romantic event of the week, Parkistry Rooftop Bar. Celebrate Independence Day with light bites, creative libations, and the best views of the Disneyland 4th of July fireworks special at the JW Marriott Anaheim's Parkistry Rooftop Bar. Reservations are not required. I haven't been there. I'm going to have to go check that one out. And the family event of the week, this one I know all too well, the Anaheim Hills 4th of July special. This one's great, not just because I'm on the committee that helps put this together. Enjoy a full day of family fun and activities as we celebrate the 245th year of independence in the United States. Start the day with a firecracker 5K and 10K run, followed by a pancake breakfast, Yankee Doodle dog show, a parade, live entertainment, fireworks, and much more. Various activities take place around the city. You can find the full schedule at AnaheimHillsCommunityCouncil.org, AnaheimHillsCommunityCouncil.org. Food vendors And live entertainment will be held at Anaheim's Peralta Park, starting at 3:45 in the afternoon, all the way until the fireworks show concludes. Fireworks start at 9 o'clock, and I think it's about a half hour, give or take. Great time. That is on the town, brought to you by Visit Anaheim. A lot of great stuff going on this weekend. I hope you're planning to have fun and be safe. Continue our conversation. We're learning about insurance. Aaron Serrano, Brian Mayhall they're with us. They're from New York Life. So from a life insurance, from what the average individual, and I was in this boat, so I can say it. My kids are in this boat until I explained it to them. Look at life insurance and they say, okay, we're trying to protect something. Aaron, what are we trying to protect? What are most people looking at?
Some of the biggest things are, for instance, protecting your home, right? If you have
life insurance for my house,
well, life insurance for yourself, but really, if you have, let's say, a 2-person household, married couple, domestic partnership, one of them passes away. Now, how can we make sure that we insure that asset, right? That the home is paid off, or that the mortgage payments keep being paid so that the family can stay within the home. Also, you cannot be replaced as an individual, but
my wife says it doesn't agree with that.
But what you bring to the household can be replaced, right? So your income, saving for children's education, those things are probably some of the biggest things that when I talk to clients are on top of mind for them to insure and to protect.
Good stuff. Okay, so now here's a couple of items that I want to get to. I want to talk about budget because we talk about a lot about home and finance. So right now, we've been going through and looking at the families that we've served over time. I did my first loan back in 1983. I helped the first family with a home loan. A lot of people weren't born then. I know. But we're going through and we're looking at the families that we've served over time. And a lot of the families, maybe they're like you, their budgets are getting blown up. Gas prices have doubled. The cost of bacon has gone sky high if you can find it. Baby formula, I know you got to fly that in. All these things are going on right now. Budgets are getting, so what we're doing is we're looking and saying, okay, how do we consolidate debt and save some money for families? And I will share that we've done this with one family, and I think we've still got this in the presentation book there, Josh. I'm not sure if it's there. rsrrapidpayoff.com, rsrrapidpayoff.com. And I think that family, we actually saved $1,800 a month by restructuring their home loans and paying off all their debts. And you guys are sitting here, okay, well, that's great. How does that affect insurance and life insurance? But if they're saving $1,800 a month, they were able to make that payment. Could we use that money to, in a financial way, a financially prudent way, safe and secure, in the insurance world?
Yeah, the answer to that is, of course, we can. That's a lot of money to actually be able to reposition and use in a different way. So, again, it comes to sitting down. What are their goals that they want to accomplish? We'll look at their risk profile. What kind of investor are they? Are they more conservative? They're aggressive, and then we can find something that will match their needs and their goals over time. And as you mentioned, it's a very secure product, so we can definitely find something for that $1,800.
Yeah, and that's one of the things that, especially this particular family, when I talked to them last year, their whole goal was, they're saying, okay, if I'm going to take money out of my house to consolidate all of my bills, I know that I know it sounds great, Ron, you're going to save $1,800 a month, but my house, I want to make sure that that's real safe. Is it real safe is the question. Are there tools that we can put it into that we're going to say, something there? It's not a U.S. Treasury bond, right? So we can't say it's guaranteed, but there are things that are pretty close.
Yeah, one of the things. So a little bit about the company. We've been in business for 177 years, and
so that means you're going to probably be here another year or two.
Probably be here a long time,
longer than me.
We have the highest financial strength ratings in the industry, so fairly safe there as well, better than most banks. But to answer the question, do do they want to make sure that they have enough money saved up for their kids' college? So we can carve off some of that $1,800 to put into a savings plan for their kids' college. We can also help them create a
Now,
fund.
is that savings plan within an insurance policy?
Yeah, and it has less restrictions and other options that are out there.
Okay, and I'll throw this in there because I don't know if this is part of the world that you get into. If it's in the insurance policy, then it doesn't get counted toward the economic family contribution. So you get more financial resources from the government.
Absolutely. Yep.
So that's a great way of positioning money.
It's a win-win.
Right. Okay. So we're going to carve off some for the kids' college funding if there's kids on the horizon.
Mm-hmm. So that's a part of it. We can also look at ways that they can put that money away to build an asset to either maybe pay off the house early. Right?
Ah, okay.
Yeah. So the savings plan, we could design it to where, in 20 years, if they have a 30-year mortgage, by year 20, they're paying off their house. If that's something that they want to do.
Don't do it. But I'm gonna say why that I say that.
Yeah.
Because if I have the option to pay off the house and I'm making more money than the cost of that mortgage, I can pull that money out to do other things or leave it there to keep on growing or help subsidize my mortgage payment as a retiree, can't I?
Yeah, everybody's situation is different.
Sure.
It depends on their age as well as if they're coming up on retirement in 20 years and that's a goal that they want to go into retirement without having a mortgage.
Absolutely.
Then it makes sense. So everybody's situation is different. We'll take a look at that too.
So one of the things that I'm hearing, if I'm correct, is it's going to give me options.
A lot more options.
A lot of options there. Now, I'm going to throw this one in there because I am the consumer advocate and I have been dealing with this a lot lately, is accessibility. Do I have access to the funds?
You have access as long as there's a positive balance in your cash value, you have access to it.
So here's the issue that I've come up with, Brian, recently. A lot of folks is, they've got a lot of equity in their property. They've decided to pay it off. They're not working. So for the most part, guys like me are going to say, we don't lend money to people that don't have an income or that we can't find an income stream to get that money back. Here, if that money is in that policy, we have access to it instead of you having to eat dog food for the end of the month because your Social Security didn't make it all the way. You can supplement that if you've planned properly in advance. Is that the idea?
Yeah, the funds can be in your bank account within a day.
Think about that. So you only have to have dog food for a day or call them 3 days in advance of running out of money and you can get that money quicker.
Yeah.
But it's all about planning.
It's all about planning in advance. Right now we're having a lot of promotions around really high interest rates. So if you want to contribute, or as Aaron mentioned earlier, pay off your whole life plan early, you can put it into an account with us. We'll give you a lot stronger rate than the banks are. So it makes sense to put it into our account and then you're going to get a lot better return.
Now, I've been told lately that it's almost impossible to get long-term care. First off, is it true? Second off, can I get that as part of my life insurance policy?
Aaron, you want to take that one?
Yeah, so we do have the ability to have a long-term care with a life insurance attached to it. I haven't heard myself that it's difficult to get long-term care, but it definitely is. I think one of those insurances that is not top of mind for people as much as other ones.
It's probably top of mind when it's too late. That's probably when it's top of mind. Great information, guys. We're gonna have to get you back because we haven't. I've still got a whole host of questions here to talk to them about, and I just got the wrap it up from the boss. So as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
My boss just pushed me over the limit. I'd like to call him something. I think I